Welcome. It's a lovely sunny day, so let's get going and go through some markets. I'm starting with this gold because I think this gold is really interesting. I've been buying the dips in this. I've been buying this 1885 to see if we can close above this 1900. I still think there's plenty of time. I think there's still dip into tomorrow, I think. Back into this week, we've got Jackson Hole, which is US bankers meet in Wyoming. So it's an interesting time. We've had options expiry on Friday. Markets have hit support. This is the time of the year we do tend to get a bit of a pickup in the market. And so if the markets pick up from here into September, then I think we can get a bit of a move. And then, so that's why I'm buying these dips still at the moment. I did think there was a gap down there at 1870 in this gold, but there isn't. According to this chart, there is not a gap down there. So I'm buying this 1885, 1900 and seeing if that can start to move above. You can see all these averages. We're underneath all these three averages and they've crossed. So I am going against the averages. I just use averages as a guide. They are an extremely useful guide, but at the moment I'm on the wrong side of these averages. But it is a huge amount of support, so I'll see if it closes. I'm not risking a lot of capital. I will add if this starts to work, particularly if we get over 1930, I'll definitely add on this gold. But I think it's worth, anybody wants to talk about gold and has got any comments to add, then by all means chuck a message in the box and then I'll unmute you. Otherwise I'll just carry on, but you're very welcome to give us, share your views, tell us what you're doing in any of these markets. So just changing the format a bit, just trying to open the format up a bit. If anybody wants to, anybody got an opinion and wants to share it. Let's look at the dollar. I'm going to keep this nice and short. I'm just going to go through the basics tonight. So dollar index on this daily chart is hitting some resistance. So look at the MACD. There is some divergence up there. See, the histogram is coming lower, but we're above all the averages on this one. So at the moment, this looks good. Let's go across to the euro. Yeah, so the euro is sat on this 200-day average and is closing higher. So we haven't sat on the 200-day average since November 22, November last year. We came close to touching it on the 31st of May this year. So this is the first time we've actually come in contact with it. So again, this is an interesting, if this starts to close higher on this level, and we can get above 109, then I think we could push back up. So let's look at this in terms of what we've done this year. So we've had so overall we've had let me think, 1, 2, 3, 4, 5. Now we've had a 1, 2, 3 wave correction. So we're very much sort of back to base here on the euro. So if at any stage we can't close above last year's high at the moment, we've stabbed above it and then closed immediately lower. So that's bearish. So if all we do is crash into 110, 110.40 and can't hold it, then this is going to come over. This is going to tunnel over. In the meantime, we look as if we're going to get at least a bounce off of this 200-day average. Why am I spending time on it? Because I think that because I'm a commodity trader, I love commodities as well as stocks. So if the dollar is going to drop off and the euro is going to pick up, that's very positive for US stocks and very positive for commodities. So that's why I think it's worth spending a little bit of time on this. Oil typically does fall off this time of year because of, believe it or not, it's still tuned into the US dry season, which is well and truly underway. Well, in fact, we're in the second half of the dry season. So if this, you've got a little bit of a head and shoulders here. So if we, I think we're going to come into 75. I think these highs in the oil are worth selling. The volume's really peeled off ever since we've hit 84. So I think this little move up here is, even today, I think that's shortable. If we come down to 75, so we've broken out of this major trend line, come into 75 or even under 75, but subsequently hold that level, then I'm back in, and I'd expect to see that push up into the year end. But I think, so I'm bullish gold, expecting a deeper pullback in the oil. And one last commodity, which I've been following very, very closely, corn. And this is it pretty much, corn and wheat pretty much move in tandem anyway. We'll have a quick look at wheat as well. I think this is coming into land and could be due a big push. I've been saying that for a while, and it's just not worked. We had a push up here in July, early July, into 560 and rolled over again. But if we, so I'm not trading at the moment, I'm backing off. Yeah, so we've had a three-touch, what is it? Yeah, there's a three-touch reversal down there at 450, 457. Is it low? Yeah, the 470 area, $4.70. If we come back and touch that and hold on higher volume, then I'm definitely going to buy and hold that for a period, certainly back into the back end of the year. We've got a series of lower highs and lower lows. So at the moment, you know, I am not touching it at the moment, having lost some capital on wheat. Let's look at wheat. So wheat's doing the same thing. We've got this huge support area coming underneath it. It looks to me as if it needs a big shakeout down to $6. We had a break up from $6 in 1st of June. So let's see if we can come back and touch that. 550, 560 would definitely get me interested. But I don't think it's going to go down there, but I could be wrong. Right, let's look at stocks. Let's look at some bellwether retails, because I think these are these could tell us, these would give us a big clue. I'll tell you what I've not done. I'm going to backtrack a minute. I've not looked at the FTSE. Let's just get the FTSE up first. Right, so FTSE is coming off of this 72.20 support. That's under all the averages. At this stage was a lot of red on there, so that looks lower. And that could come and find this March low. So the March low down there at 72.08, roughly. So I think highs in this one are still worth selling. So we've seen a high today of 72.30, was it? Yeah, 73.20. Sorry, got the numbers around the wrong way. But any deeper pullback into 74, and I would potentially look to short. I think any of these highs at the moment are short, but 74.30, 7400, 74.30. If we climb up there and sell, 74.72 is the really major zone. So any push, so if you're very patient, if we see that climb back to that zone and fail, then I would short. Right, let's get on with the stocks. So Tesco had a good couple of days. Volumes increased. I still think this is a difficult sector, just knocked into resistance. I mean, I would look at this the other way around. If this comes back into, it's a good quality stock. If that comes back into those lows, 240 and holds, then I think that's worth a shot. But I'm not a great fan of this sector as a whole. So at the moment the sector's picking up. Sainsbury's is really struggling. Sainsbury's looks as if that wants to go on all the way down to 250. That is really struggling. So I would back off. So let's have a look at EasyJet. Wow. EasyJet is not happy. Weaker oil could pick this one up. As you'd expect, the airlines are very, very susceptible to oil price movements. But at the moment, that looks slower. The major support's down there. So we've set a high of 533. Certainly nothing. I would not buy that at this stage. Right. Let's look at IAG, British Airways. Okay, so EasyJet is getting hit while this one is sitting up okay at the moment, but it looks very vulnerable. We've already had a marginally lower high, and the volumes are pathetic. Right, let's come out of that sector and look at banking. Like I said, I was going to keep this relatively short today. Barclays. Wow. So there's a lot of charts, a lot of markets underneath these averages and looking weak. And this is coming down with a lack of volume. So there doesn't appear to be any buyers in this one as well. So I would expect to see 139 tested soon, unless we get a pickup in volume. And Lloyd's. Right, so let's look at some that are buyable. Let's look at the energy sector. Nope, that is Tullow. We talked about Tullow at the lows here. Tullow is still going. That looks as if that's getting ready to touch 40. Any pullback to 34. If it has a bad period and pulls back into 34, I think that's buyable. So we've had a low of 22, and even today we've touched 37, 38. I would not chase that, but if that did pull back into 34, I think that is worth a trade. And hunting. This is interesting because the volume is better down here. I think this could be a potential breakout. It looks to me as if this 250 is going to hold. I think it's worth buying 250 with a stop under 240, 235, because if this catches a bid, it's potentially a bull flag. So you've got the mast is here on the 6th of July, pulls back into support. There's always a risk when you get a big move like that you could have a deeper pullback into that big move, but this doesn't, at the moment, it does not look as if that's going to do that. So I think hunting is worth a shot. Let's look at the big boys. BP holding up, looks all right. So let's look at it's going to feel for housing. Yeah, so these housing stocks are really coming off. That's Taylor Woodrow, Barrett Developments. Yeah. So, I mean, these are the organizations that are most exposed to interest rate rises. I mean, the projection is we're not going to see a reduction in rates until spring next year at the earliest. So UK inflation is still very stubborn. So we're likely to see another 25, 50 basis points this year alone. Been talking about this for many months now. And you can see these big property guys really struggling. Let's have a look at Rightmove. That's a good bellwether. Yeah, so even Rightmove is peeling right back. So yeah, this very aggressive rate cycle that we've been in is taking its toll. So that's the reason to be cautious. Right, stocks I like. Let's talk about stocks I like. We haven't looked at miners. Quick look at miners. Pan-African, I think, is good. Looks if it's holding this 12.9. If you want to, you know what? I think it's safer to sit tight and wait and see if that closes above at least 13.5, if not 14. But because to give you more higher probability, because at the moment that is still struggling. I've just lost my list. I'll just go and find it. Right, I talked about this one last week. I think Pfizer is a lovely stock. Volumes are coming back. Any pullback into 36, currently 37 here. If we see 30, 35, 36, I think that's viable because I think this one has got a decent chance of pushing up. Bristol Myers, keep an eye on that one. It's struggling. Keep an eye. At the moment, it's not. There's no buy signal. Medtronic is really struggling for some reason, so definitely back off. Right. Anything you want me to look at? Otherwise, I'm going to move. I'm going to just go and have a meal now. Airbnb. So that was up at 155 nearly. That's dropped right back on itself. So I like the pharmaceuticals. There's a couple of energy stocks I like. Otherwise, there's still a lot of frailty in the markets, particularly in the vulnerable retail and building sector. But I'm liking the gold. But we need a decent close on that gold. Brilliant. All right. No questions are coming in, so I'm going to leave it there. Anybody on YouTube want to ask a question? No. Okay. All right. Well, have a good evening. Let's see how this week pans out. But at the moment, need to be just very selective and don't put too much capital in the market is my rule at the moment. All right. Thanks, guys. Bye.